Okay, well, welcome back again to another market report. I'm Darren Langill, the CEO of Redline Real Estate Group. For those that are tuning in with us for the first time, today I'm going to be reviewing the Calgary Metro stats from November. This is one of my favorite times of the month because not only do I get to present my take on the enormous amount of data that is available to us from our real estate board, but it's also when I get to deep dive further down with all the Redline agents. Trust me, you won't find a keener group of agents wanting to be educated properly on the market here in Calgary. Now, as we complete November, we kind of close the door on, I would say, the major buying and selling markets of the year. As I mentioned last month, the November does mark kind of the last push for homeowners who obviously want to buy and get in settled into their home before Christmas. We expect November sales to drop from October, and we also expect inventory to drop as well, as many homeowners are now thinking, I'm pulling off my properties off of the market, and then less new homeowners are hitting the market as we close into December. Both of these did happen as we'd expect, but in varying degrees across the different market segments, for which I'm going to talk about a little bit later. So let's dive into some of the key facts that I found from reviewing November stats and then how it relates to you. So number one is sales continue to be significantly less in relation to last year. This is a theme that we've had all year long. As a whole, it's 14% off of last year. And again, the headlines you might read talk about being well off of long-term averages. Yes, that is absolutely the case. The trouble with that is when the real estate board or the headlines, whoever's writing the articles, compares to a long-term average, I don't believe it's any longer relevant to have this story. For us in Alberta and in Calgary specifically, we're living in a completely different province now and a completely different economic situation than this historical average scenario. So personally, I would rather work with our new normal, which is only the last, say, 4 years, because so much has changed around what drives our economy worldwide. So nothing really compares other than these last few years, which is our recent memory. So number two is inventory is easing, right? That's easing up. This is what we'd expect. This is what I said at the beginning, and this is what we really hoped for, and in a big way, and as big of a way as possible. I really want to see this trend continue. One thing I wanted to show you about inventory, and Dave, can you pull up the new inventory graph, please? And as we get this up, I'll mention something about it. So we've talked about inventory being very high. Look at this graph. This is 10 years worth of information, and you can see there's a red line that goes across. You can see my hand going behind it. What do you notice here? Well, 9 of the 10 last years have basically what we're saying is new listings come to market year to date. Interesting. The last 9 years have had a lot of shifts in our market. Can we all agree? Heck yeah, it sure has. What this means is no matter the ups and the downs of the market, Calgarians, greater Calgarians, it's not mattering to them because they want to do, which is the new listings, right? I want to move, so I'm putting my house up for sale. It hasn't changed. All the want to do, no matter what's been happening in the market, interest rate changes, oil prices changes, political changes, none of that's changed. The what to do is still the same. The difference, though, is the what you get, right? In the what you get, that's the economic thing. Those are how many sales have actually been able to happen. Now that's what's really driving and changing. So I just thought I'd point this out, and it's a thought point that I wanted to hit you with, that it's not what we do that's changing amongst all of the chaos out there. It's the result. So something just to leave you with. Now we're going to go into number 3, which is months of supply, which is a result of the supply and demand scenario. So Dave, you've just pulled up the months of supply graph. Thank you for that. I want to show you, just to kind of paint our current reality, because I'm not one to hide from anything, hide from the fluff. I want to give you real information, factual. So as you see, I've created this graph, and this is all the different market segments across the city. There's 32 of them here. And as you can see, I've got arrows on the bookends of this that are saying has gone up. Months of inventory is risen because of our inability to sell as much as we've typically sold in recent years. So all across the board, I just want to inform you that it is climbing, and it's a pretty robust, heavy sense that things are just slowed. The pace has slowed. Now, I did point out there's one extra one there, that this is that market that I've hinted at a couple times throughout the year, and that's the inner city infill market. Its months of supply is almost 10 months. So if you are in that market, that's going to create a different scenario than pretty much the rest of Calgary, which is sitting, in that band of 4 to 5 months of inventory. The fourth item I wanted to hit on is year-over-year prices. Dave, can you pull that one up? Perfect. This shows how we are across, again, all market segments, and I've created that red line once again to kind of whip yourself through there. And you'll see, as a whole, the market, just depending on all the different areas, it's not really adjusting differently across. As a whole, this red line is somewhere around that 3% mark that we are below in prices, benchmark prices from last year. So you can just see it's a pretty broad stroke, but it is a pretty consistent stroke, other than a few outliers that might go as low as 7 or 8%, which again, you can always ask us about if you want to know more information. So those are some of the high level stats. Let's dig a little bit deeper into different property types, right? And that's again, detached, apartment, and then the attached market. For the detached market, that's the biggest group of our sales. Year over year, the detached market is seeing quite a slowdown, 22% off of total sales from last year as of November's numbers. So that's a significant drop. New listings are now down 3%. Good news, right? We want to see listings come down. Days on market are up 24%. So that's where that months of supply that I painted to you, that's why you're seeing that increase, because days on market are growing. This chart shows those specific numbers. So if you're somebody that just wants to see, okay, Darren, it's great to hear 22%, you can look a little tighter, and I've created a box that shows those values. The big one here, that 22% drop, you will notice from that top box to the bottom box, that means about 200 less units were sold across the city last month just for the detached product. That's pretty significant. So that's what we have seen. Now let's flip over. Now we'll start to talk about apartment. That detached one being the fuel of a lot of our market and the driving force. With that being that far off, it is concerning, and it is something I'm going to heavily watch as we kind of crest through the next 2 slow months. But with the apartment graph, I've been telling you all year the apartment market's been fighting back, and it does. It's continuing to fight back. I love it. Nobody really wants to talk about it, but I do. Sales are up in November over last year again, about 7% better. New listings are down 22%. Heck yeah, that's a fantastic scenario to help claw through the old inventory that market had. And days on market, it's crept up a bit, but it just by 8%, but nowhere near as high as the other markets. So when you pull this up, again, the data is just showing you. If you just wanted to see how many numbers that translates to, take a moment, pause the video, and you can see what I'm talking about there. Well, why don't we dive into price ranges? This is always an interesting one because things do not happen the same across all of the markets, as you're fully aware. The last few months, we've noticed that band of average price point homes, right around that middle grade of our market, has done and performed better than a lot of its kind of extremity, the ones around it, which is good news because that's a bulk of our purchasers and sellers. And again, is this going to be 3 months in a row that we've seen a clawback? And the reality is, no. Unfortunately, it was a nice little push through the end of the middle part of Q3, but there's only a few markets. Actually, as of November, there's one market that's higher than last year in total sales. And guess which one that is? It's the lowest price bracket. It's the 1 to 199 has actually seen an 11% bump over last year. There's a couple that are close to last year's figures, and close meaning 1% to say 7% off. That's the 2 to 299, the 3 to 350. So again, the lower price brackets. And then there is one in the luxury band last month. The 125 to 15 was dead on par. Had the same amount of sales as it did at this time last year. So that's a November snapshot. But oftentimes we want to look year to date. And is that picture different? It sure is. The luxury band that we've talked about all year still continues to outperform last year's figures. And when I say luxury, we're talking basically that 125 all the way up to the 2.5. So quite expensive homes. It continues to do better than last year. But the bulk of everything else is off, 15 to 25% on almost all of those price points. Now, some are better than others, and if you are searching specifically in a small band, which a lot of us are when we're buying, the dynamics are different. So please reach out to your agent so you know where you're falling, because it does adjust, and that's why you see some things sell faster than other when you're talking to your friend that bought an infill versus a friend that bought that average sale price home. There's a difference in that market, and it's real, so you have to want to be aware of that. The worst performing market is in that infill band. Again, I said the months of supply is about 10 months. Well, the data is showing here also that pricing segment is doing the worst year over year as far as how many sales are happening. All right, so that's a lot of data. Let's dig into a couple key things around the hottest performing market segments. And again, I could go very deep on this stuff, but we're not. Basically, what I wanted to tell you is because inventory is falling off and sales are slowing down as well, but despite all that happening, we've seen what I'd call the sales to new listings ratio as an average across detached, apartment, semi-detached, and rows all move up. They've all bumped up, and some significantly, meaning that ratio of sales that have happened to new listings has gone up. So that's good news story, and that's what we want to see. It is, like I mentioned last month, you'd expect that to happen because the amount of new listings hitting the market has drastically slowed. But the fact that it's rolling up nicely, that is a good news story. If it was dropping down, we'd have more concerns. And again, as far as what are the best and worst performing markets around benchmark sales price, again, it does adjust all over, from some areas being as low as -7% year over year to some actually being up 3% year over year. So that's a 10% swing that if you are interested to learn more about your specific section, you please reach out, because again, that's a massive difference. We do not want to paint everybody with the same brush. I wish I could. It'd be easier for you, but again, that's why we're here to pull the great information for you and to create awareness around your search price or sale price. Hottest communities. Again, something my agents love to know about, and as well for those of you that are buying and or selling. When I say a hot community, I do it in two ways. Again, sales to new listing ratio, how are we doing, as well as months of supply. So when the months of supply is super low, that means it's been selling well and likely to continue. This month, we actually had a significant amount of communities that are showing strength as far as that sell-through, months of supply. Some of the hot ones I will just name off: Deer Ridge, Mayfair, again, a luxury community, there's only so few that sell. North Haven, Ramsey, inner city community, Deer Run, and Rosemont. So those five are 6, if I can count, are all 2 months of supply or less. So that's good, right? I showed you that big graph showing 4 to 5 months of supply as our city average. So those are hot in comparison. And then there have been also an incredible amount of communities that sold more homes than were listed. That's great news. That's helping get through the absorption of all of the properties on the market. Ramsey's on that list, 400%. Deer Ridge, Deer Run, Maple Ridge, Kingsland, Garrison Green. All of these are 200% or better sell through. So and there's more on this list. And that's why, again, reach out, place your comments. Let us know what you want to know, because it's really easy for me to pull this up and get one of my agents to reach out and provide this to you. So for buyers and sellers, what can I tell you? Let's go for the buyers first. It's your market. That's it. Plain and simple. I hate to just beat that same drum, but this market is yours for the taking. Now, that doesn't mean everybody is going to fire sale their home to you. But many sellers will be taking less than they hope to make a sale happen. Put a well-crafted offer together and give sellers who aren't seeing a lot of activity, honestly, something to really think about. But well-crafted that will help them accept what you're going to be throwing their way. Will the market go worse? Maybe a bit. And as gradual as I've been discussing kind of all year long. But I'm promising you, you can, with the right agent, negotiate that now into your purchase price today to let you take advantage of the current scenario. I promise you, you can do that. But remember, all market segments, all price ranges aren't being affected the same. So know that as you're out there navigating the market. For sellers, I'd like to challenge you to think about this. Am I really a seller right now? Which means if I am really a seller, it's because I need to sell and I'm willing to work with the current market conditions and the adjustments that need to be had with it. Because honestly, this is me as a realtor, as the CEO of this company. If you're not a seller by what I just said, I'd suggest not even listening or listing and or removing your current listing from the market. Because if you're not a seller, it will only clutter the market. It will frustrate you as a seller and could even have your personal little hand in the further reduction of overall sales prices. It's a bit of a heavy message, but it's real. If you are selling and then rebuying in the same market due to a fact that you're trading up, you're trading down, the reduction in your sale price beyond your comfort zone, I would suggest is a bit irrelevant because you're going to be gaining that same on the purchase side when you make that. That opportunity exists for you to recapture. That's really important for you to realize because it can mean you making that life transition that you really need or want or not if you're too tight to that or romantic around that sales figure. Look at the differential between the buy and sell, not just that sale price that makes you a little bit scared. Now, for everybody else, the greater Calgarian is what I call it on my message. What does this mean? Well, a stable market is a market that is good for us all. What I mean is a market that is balanced and it isn't too weighted to buyers or to sellers. Is someone not in the market right now? Now, if you have friends, colleagues, family that is, please provide them the advice to just ignore those headlines that they read and ensure that they are getting their advice from a true professional. The market segments, the price ranges, the areas, they differ greatly, and the better educated your friends, family, colleagues, the buyers and the sellers out there, the better overall. Point them in the right direction. Less panic is best for all parties, buyers, sellers, and for your own equity to be protected. Now, as I wrap up another market update, I'd like to leave you with a few key items of note that I didn't mention earlier. Dave, I'm going to have you bring up one last graph. This is the sale and inventory and price graph. Nope, not that one. We'll go back. That's the one. Lots of stuff going on this graph. Yeah, you've heard me talk a lot about a whole bunch of things today, and if you made it this far, thank you. I have to thank you for that. This graph, I'm going to bring your attention to that box on the top left, and this is what I'm calling the gap. This is the difference in inventory from where we sit today, which is that red line, to that top of that column or that graph, that bar. That's the gap. And this is larger than I'd like to see. That's the gap that we're coming into the slow season with more than we had last year. That, along with the lower bar, which shows that we have had less sales than last year, those two things obviously don't go beautifully together to give us an indication that the market is strong. So this is that scenario that as I go into December, into January, I'm going to be reporting on to you that I'm hoping that gap closes, and then we also see a bit of a bump in sales. So I'll be watching that intently. In our year in review, I'll be talking about where we ended up in a big way. Dave, pull up the chart, our very last chart for the day, and that's it, right? You see the bottom right. This is the macro view of sales inventory, and you can see the top band up there, right there, is last year, and then we sit with this year. There's the box with question marks, and that's what December is going to bring. And my hope is we start to see that the inventory does continue to fall off and our sales remain somewhat steady from where we're at today. But we will see, and that's what I'm going to be talking about as Calgarians finishes the painting from this year and we start to talk about what 2019 will bring. So that is it. As always, thank you for spending as much time with me this month. Today I think was a long one, but there was a lot to talk about. I wish you all an incredible, happy holiday season. If you've got specific questions about your home, your area, your price range, or anything else, just please reach out so you can be connected with somebody fantastic here at the Redline office. If you're thinking, oh shoot, you know what? I'm thinking about the spring. That's when I'm going to be making this life transition. And you're just looking for a basic home evaluation with no strings attached. Please just know on our website, you can pop onto it. Dave, if you pull up the link and you'll be able to see, so there's this what's your home worth section, and when you fill out your address, it'll connect us to your information. We'll reach out to you and then pull together a market evaluation to give you an idea what to expect as you look into 2019 and try to make your next life move. So thank you again. Have a fantastic Christmas and bye for now.